Welcome to Working Title with Zach Sams, a show dedicated to updating you on the current state of affairs in the Dallas-Fort Worth Metroplex. We'll examine new developments in our thriving city, economic activity, and explore how the real estate and title industries are contributing to make DFW strong. Now, here to spew his city pride, your host and fellow Dallasite, Zach Sams.
Well, here we are. Zach, what's going on, man?
Oh, same old, man. How are you?
It's been a long time since I've seen you.
Yeah, it's been a minute.
It is.
Yeah.
It is. We're here for another show in DFW. I was just thinking about that intro, and like everything she says in the intro is just totally not true. We don't do any of those things. Maybe we should change that.
This is a show about how much we love Dallas. That's valid, I think. Yeah,
it is. Okay. Well, all right. Thanks.
All right.
I was feeling bad about it for a minute.
We can figure something out.
We'll figure that out. Yeah, it's total lies all at the beginning of that. So no worries. But hey, this is going to be a great show. We got some great guest hosts with us. I'm Zach Sams. This is Working Title, and this show, and I keep forgetting to mention this, but this show is brought to us by Kensington-Vanguard National Land Services, local title company here in DFW, growing all over the state. One of the we're the largest title agency in the country. It's a big deal, and so we just want to thank Kensington-Vanguard for being our big sponsor. And with that, that's all we're going to talk about the title industry. We don't want any car accidents out there as people are driving, falling asleep. So with that, I want to introduce our guest host. We got a great show. We have two guest hosts today, so they will be fighting for equal airtime. So Taylor Hampton with Movement Mortgage. Taylor, how are you doing today?
Doing great. Thank you for having me.
Absolutely. We're glad you're on. And also, let's not forget, we have Anthony Calabrese. Did I say that right? Or is it Calabrese?
Calabrese, but either way is fine as long as you don't call me late for dinner. We're good.
Right on. And Anthony, you're with Liberty Home Equity Solutions.
That's correct. We're a reverse mortgage company. We're probably one of the top wholesale lenders, and we're one of the top 5 retail lenders in the reverse mortgage world in the country.
That is interesting. Those are some good stats and some good things there. So I want to hear more about that. The reverse mortgage. I mean, kind of Taylor will tell us. Since Anthony kind of stole. I didn't ask him like all that, but he just went ahead and said it anyway. So tell us about what you do at Movement Mortgage, and so everybody that's listening is not like, why do they have two competitors in there? So you're both in the mortgage industry, but a little bit different, right?
Definitely. I'm more on the forward side with Movement Mortgage, one of the fastest growing mortgage companies in the country. We're known for our upfront underwriting, 7-day process, and also what I'm here to talk about is our great renovation department, 203K and Homestyle loans.
Interesting. So, what is really awesome about this show is I'm really going to learn some stuff in this show because, in the title business, we've closed all these loans before, but actually the nitty-gritty of them and what they mean and how they're helping consumers out there is really why I want y'all to come on and tell us, a little bit more about these. So, Taylor, I'll start with you first. Kind of, in a nutshell, for the person who doesn't know what 203K is, they're thinking, hey, that must be some type of new financial product that I should invest in and, get a good return, right? But it's not like a 401K. A 203K is a type of mortgage, and what does that really do for the consumer?
Really? Yes, definitely. It basically allows you to buy a house and at the same time roll in any degree of repairs that you want in most cases. It can be anything from just a few $1,000s in cosmetic repairs, or if there's an existing foundation still on a property, you can actually, in some cases, rebuild the entire house from the existing foundation. So it's very broad.
That's quite a scope.
Yes, definitely.
Okay, interesting. Now, Anthony, so I think everybody's heard of a reverse mortgage, but I bet you would agree that there's probably a lot of misconceptions on the reverse mortgage, and it's really starting to come up in a lot of conversations this day. So tell us a little bit in a nutshell what a reverse mortgage is, and who uses this product.
Well, a reverse mortgage is basically taking the equity you have in your house and using it instead of being house poor. It gives you the ability as a senior to have a better quality of life and not depending on your children, in your later years to support you where you could support yourself. It taps into the equity in your existing home. Also, some of the myths that you hear about it is the bank owns your home, you're going to get kicked out if one of your, the spouse dies, and all of this is untrue. It's a FHA insured loan. The bank owns the home. That's correct because they have a lien on the property, but whatever equity is in the home, you have. That's equity,
yours.
And nobody could take it. It's just like a regular mortgage.
Right.
A regular forward mortgage. And the thing about it is it's an equity line of credit with a negative amortization that's insured by FHA.
Interesting. And you mentioned something in there. You said senior. So
Yes.
So I can't get a reverse mortgage at under 40. So what is the definition of a senior? When is somebody eligible for a reverse mortgage?
Great question. That would be 62 and older.
62. So
62.
Basically when you first can qualify for Social Security, right?
Pretty much, yes. And the interesting thing is that a lot of people don't know. For the next 19 years, we have 10,000 people a day turning 62.
Wow.
So this is an emerging market. And something, this product is addressing what's going to be a future concern because a lot of people don't have enough money in their 401ks and tapping into the
or in their Social Security probably for that matter.
If Social Security is going to be around, right?
Right.
So this is tapping in to that
to a need.
To a need, exactly.
Yeah, absolutely.
And to a growing emerging market.
Awesome. Well, thanks for that. So we got two really kind of different loan products out there, but they're kind of a tool to really help people, right? So Taylor,
Right.
like in your experience, if you're a cash poor person, but you found a house that has some, it's a good home, maybe it's got good bones, but it's just not move-in ready or is not
Right.
livable. Is that where you use a 203K or a renovation loan?
The most recent renovation loan that I did, there were foundation problems with the property, which is really common in DFW. So we did some foundation work, and they also wanted some cosmetic work, paint work. So that type of thing's very, very common. Like I said, it can be as little as just a couple of things like that to an entire remodel of the entire property.
Interesting. So a 203K that's really like an FHA loan, right? So
Right.
it's still like the 3.5% down.
There's two different versions. There's the FHA version, which is 3.5% down. Of course, you're limited to owner occupied, just like you would be on a regular FHA loan. And then there's also the Homestyle version, which can be anywhere from 5% down to 15% down for investors, and that can be used as a second home or an investment property.
Okay, so it kind of goes across all.
Right. Yeah. I mean,
all
the best thing,
consumers.
if you're interested in doing a renovation loan, just get in contact with me. I'm going to be able to lead you in the right direction as far as program, down payment, et cetera.
Interesting. Okay, well, thanks for that, guys. So we're wrapping up segment one. When we get back, I really want to kind of get into the nitty-gritty on, how a reverse mortgage would work or how a renovation loan, how somebody goes about that, what steps they would take, and kind of give them an understanding if that might be something that would help them. Does that sound good?
Sounds
Great.
Guys, thanks so much for being on. This is Working Title with Zach Sams, and we'll be back in a couple minutes. Thank you.
Thank you.
He calls his show Working Title. Bless his heart. More with Zach Sams still to come on RNCN.
Sometimes I don't know why, but this old town just seems so hopeless.
Determining value in the Big D and beyond. This is Working Title with Zach Sams.
All right. We are back. Working Title with Zach Sams. We got some great guest hosts with us today. We have Taylor Hampton with Movement Mortgage, and we've got Anthony Calabrese with Liberty Home Equities Solutions. So they're not competing against one another. They have some really interesting products in the lending world that can really do some great good for the consumer out there. And so, Taylor, I want to get back and start with you. Talking about the renovation loan, you mentioned the 203B. So
203K.
203K, excuse me. so circumstances, like when does somebody use this? And just sometimes maybe there's a reason they should use it and they don't even know about it. So like, how can this come in and maybe save the day or make their life a little easier?
Absolutely. There's two really common examples. One would be you find a house, you want a pool. That's pretty common. With the Homestyle program, you can put in a pool. Probably even more relevant though is, say you find a house in a part of town that you like very much. You like the schools, etc. But you just don't like the way the house is laid out. You don't like the kitchen. There's something about the house that you don't like. You want to change. With the renovation loan, depending on your circumstances, it could be the 203K or the Homestyle. You can actually go in there and redo the kitchen like you want to do, like you want to redo it, just
right.
Just to your taste, and then you can keep your kids in that particular school and stay in that part of town. So it's an amazing tool. It's very underutilized.
Well, that's cool because it's like everything. It's location, right? So you're trying to get into this neighborhood. That's where you got to be. But you can't find, in this market, right, where it's low inventory, you don't have a whole lot of options.
Right.
Houses sell fast. So there's a house there. It's not quite what you want. With this loan, you can kind of make that house what you need it to be.
Absolutely. You can almost do it. It's almost like a custom type product.
That's really cool. So that's that could really solve the problem for a consumer out there that's not being able to find what they're looking for, especially in a market like it is today.
Yes, very useful product.
Absolutely. Okay, let's shift gears. Anthony, so on a reverse mortgage, so the main thing, how does this really save somebody? So we hear about the story every day, right? We've got, somebody that's reached retirement age, they're no longer working. Probably a lot of people hit in the recession, where they had good retirement going, but the recession kind of wiped that out. Now they're a little cash poor, retirement poor. How does a reverse mortgage step in and save them?
Great question. What it does is it puts their equity to work for them. So a reverse mortgage will, if they have a mortgage payment or even if they own their house outright, this will give them the ability to tap into the equity in their home and eliminate a mortgage payment, pay off debt, give them a better quality of life. And the option is, if they have it paid off and they just want a credit line will grow year over year because as they get older, they qualify for more equity in their property.
Okay.
So at the end of, say, 8 to 10 years, they could pretty much double that credit line if they don't tap into it. And as I mentioned before, it's a better quality of life. Their family doesn't have to step in and be burdened with it. They use the equity in their house and just a better quality of life and the cash flow. It helps on their cash flow.
Right. So they're getting, from Social Security a couple grand a month. They own a home and they get to stay in their home, and then through the reverse mortgage, they're getting some money on a monthly basis. Is that how it works?
You could put it on a credit line. Mm-hmm. You can get a monthly stipend because with a reverse mortgage, true, you don't have a mortgage payment, but you're still responsible for your taxes, your insurance, and your HOA fees.
Right.
So if depending on what the situation is, because every situation is different, they can get a stipend every month. We could send them a check for that amount.
It sounds like it's pretty customizable.
It's a very flexible program. There's even no cost. We have a no-cost program, which a lot of people in the industry, our competitors, don't. We have a no-cost where there won't be any cost. Everything is...
What does that mean? Like no closing costs kind of thing?
Yes,
like, what does that mean?
No closing costs. There are some fees, the appraisal fee and the counseling fee, because there's counseling involved. It's an FHA loan, sort of like a first-time home buyer. They want to make sure that people know exactly what they're getting into, and they're educated, right? So that's $125 fee and the appraisal fee. So they have to come up with those, but we could create a stipend for them to get a monthly check to help them cover those other costs.
Okay, interesting. Well, that kind of shines some light on that subject. So in the break, you mentioned to me, well, you could actually use a reverse mortgage to buy a home. And I kind of was, I did a double take on that. Like, I thought reverse mortgage means you owned a home, you had equity, and you're kind of tapping into that. But how do you buy a home with a reverse mortgage? That just sounds backwards.
This is, something realtors and financial planners love this option of the reverse mortgage, because what it does is, instead of people pulling out all their equity to buy a house for cash, which if you talk to a lot of realtors, a lot of people are buying homes for cash. At this point in their lives, and instead of doing that, they can keep their money invested, making their 10 or 11% or whatever they're making, they can keep half of their money invested. And say you're 62 and you want a $200,000 house, okay, you could put, or a $400,000 house, excuse me, you put 200 down and you don't have a mortgage payment for the rest of your life.
And the other 200, you keep working for you.
You keep working
at
for
a higher
you.
interest rate.
Now, the flip side of that is, if you're, if a $400,000 house was all you could afford when you were going with a forward mortgage, okay, you could actually go to a 250 and still have less money coming out of your investment account and get the house of your dreams that you're going to be in for the rest of your life.
Right.
And one other caveat, I don't mean to hog the mic, but I'm so excited
That's
about
why we
this
let
product.
Taylor go first, yeah, so he can talk.
It's an Italian curse, I'm sorry, But what the great thing about this product is, and one of the biggest myth busters is, when I get to a certain age, they're going to kick me out of the house. That's incorrect. If you outlive your life expectancy, your heirs, whoever you're leaving the house to, still get, even if you're upside down and you've used all your equity and you're upside down in a property.
That doesn't fall in the heir's lap?
What happened? No. The heirs get to purchase the house at 95% loan to value.
Wow.
Okay? That is great.
What if they don't want to purchase it? What if they want to sell it? Can they do that?
They could sell it and make the 5%.
Wow.
So that's just a great tool, and people don't understand that. And that's where the FHA insurance comes in. Mm-hmm. It protects the lender, it protects the borrower, it protects the senior.
Interesting. Well, that is really good information. I mean, I'm learning a lot about reverse mortgages that, I've been in the real estate industry. I've been working with lenders for 12 years, and, I have a lot of misconceptions. So I think this is probably shining some light on a product that, it's probably going to be very useful. Like you said, 10,000 a day
for 19 years
are turning 62.
Yes, sir.
Oh my goodness, that's really something. So, all right, let's shift back to Taylor. Let's let him talk. So, and we got 1 minute, so we'll go back and we'll go into the next segment with this. Sure. But so, Taylor, I want to ask, okay, so they do the renovation loan, right? They needed the new kitchen. Do they move into the home and then the kitchen gets done, or do they have to wait till it's get done? And how is that money delivered to the contractor or whoever's doing it?
Right. So we close on the house just like we would on a normal transaction, and then the renovations start after that.
Do they get to move in at that point?
They get to move in at that point, and
or I guess they have a choice. Probably
they have a choice. In some cases, you can even roll some of the mortgage payments. If the house is being completely torn up and it's not livable, you can roll some of the mortgage payments into the renovation loan, and they don't have to move in right away. If they want to move in right away, they can. There's definitely some flexibility depending on which program they go with. All of the financial transaction goes through our draw department and is part of the loan. The other big thing is we don't allow self-help. You can't just go and do these projects. You
don't get the do-it-yourself stuff?
No, they've got to be licensed and have to have insurance. Got to be a reputable contractor.
So y'all kind of check in on that. All right, so we're gonna head to the break, but we'll follow back up with how that kind of works, and then we're gonna find out, guys, how we can get a hold of you and get questions to y'all so people can find out more about these products. So we don't have enough time to get into all of it. So appreciate you guys being here. We'll be back in a couple minutes. This is Working Title with Zach Sams. Thank you.
Thank you.
Pointing a microscope on the Metroplex. More of Working Title with Zach Sams right after this. Buying into the Texas lifestyle yet? Working Title has more to invest on RNCN.
All right, we are here, segment 3. We made it, no injuries so far. Woo-hoo. We got some great guest hosts with us, Taylor Hampton with Movement Mortgage and Anthony Calabrese with Liberty Home Equity Solutions. Guys, thanks for staying on for the third segment and not running out. We're glad you're back. So, Taylor, let's get back to you first, so Anthony doesn't hog all of our airtime. And just kidding there, Anthony. So, but seriously, so the construction loan thing. So I want to kind of follow up on a couple things. So,
sure.
And there's two types, right? We got
There
the
is.
203, and then we have the Homestyle,
Homestyle,
right?
right.
So, how does do homes have to qualify for a construction loan, or can anybody with any home do a construction loan? How does that look?
So as far as the property condition is concerned, with the FHA 203K, as long as literally there is some remnant of a foundation there, you can pretty much rebuild the entire house.
Now, does that have to be like a slab, or could it be pier and beam?
No,
What if there's like a 2x4 laying on the ground? Is that
probably going
foundation?
to need more of a slab.
Okay.
But I mean, they still have to qualify for the loan just like they normally would on an FHA or conventional loan. But with the 203K, you pretty much can rebuild the house as long as there's some sort of foundation there, and then anything in between.
So you just really have to have the desire to change something in the house and ask for them to do that type of loan.
Right,
Really?
right. With the Homestyle, it's a little bit different. You can get more into the luxury type items. Obviously,
Yeah,
we
like
talked
you
about.
mentioned the pool.
Yep, you can put
So
in a
that's
pool.
not a
with Homestyle.
renovation.
Right.
You're just like adding a pool.
You can do luxury items
Okay.
in certain cases with the Homestyle loan.
Is that better than like? Is it better to so just with the pool, because everybody wants a pool, or at least they think they want a pool
Right.
until they have a pool, right? It's like a boat. But so is it better to do like the Homestyle if you know you're going to add a pool? Is it better to go that direction, or would it be better to buy the house and then get a loan for the pool or finance through the pool company, or does it really matter? Like, how does that?
In my opinion, it would be better to go the Homestyle route because you're rolling that into the interest rates that you would get on a home loan,
Which would be lower.
Right. I would assume in most cases it would be.
Now, are people surprised when they find out that they could do that they could actually put a pool and finance that through their mortgage? Because I did not know that.
Right. Yeah. One of the biggest challenges with these loans is just people don't understand them. They often think they're much more difficult than they really are. They don't understand all the different things you can do with them.
Well, that's interesting. So, I mean, like, it always comes back to, like, communication and informing the consumer on what's out there. And there's, like, a lot out there, but you kind of got to do your due diligence, I guess, or kind of,
Right.
Really look into that. So, well, that's really cool. So I wish we'd known that. We might have. Well, actually, I'm glad we didn't know that because we probably would have a pool. So that's a good thing. So let's shift gears. Let's go over to Anthony on the reverse mortgage. So Anthony, we were on the break we're talking, but there's more than one reason why people do a reverse mortgage. I mean, there's like the glaring reason, like, oh my God, fire alarm, we don't have enough money, let's do a reverse mortgage. But I mean, there's other reasons. So what are the top reasons people would? Or that you're seeing people can use a reverse mortgage, and how can it help them other than just their cash poor in their retirement?
Great question. What I would say is one of the number one reasons is cash flow. They want to improve their cash flow.
Sure.
Because they're strapped with debt, for whatever reason, and they want a positive cash flow. Another one is, after really talking with people, it's like, it takes a while for people to open up, but when they open up and they really tell you about their dreams, it's like, I can't tell you how many people want a better quality of life in their twilight years, whether it's traveling the country, seeing family. Do you realize that some of these grandparents or these seniors don't see family for a year and a half because it takes them that much time to save up money? I think that's a tragedy when they have an asset sitting there that could work for them.
Right.
So I go through that with them, and like I said, a better quality of life, seeing family. Sometimes they want to buy a place where everybody can go to. Maybe it's down the shore, maybe it's on some coastline or by a lake. And if they have equity sitting there, and they don't have to pay on that equity with a reverse mortgage, but they have some kind of a budget where they could afford it.
Why not use it?
Why not use it to buy that second home where maybe once a year or twice a year, everybody in the family comes to a certain destination and they see them, or maybe it's a tranquil place for you to go to.
That's a great point. I mean, like, the number one thing people say on their deathbed is, what do you wish you had done more of? And it's never like work more, or it's never hold my equity in my property until I die. It's like, I wish I'd spent more time with loved ones. And so, I mean, that's kind of an avenue to do that, isn't it?
Yes, it is. And it's also, a lot of them are responsible, and they don't want to leave their children with a burden. They don't want to be a burden to their children. They want to have independence and integrity in their later years. So this allows them to do that, because if they keep money on the equity line, which in some cases could be a couple of $100,000, if they need private care, assisted living, that's all private pay.
And it's expensive.
Yeah. So why not be able to do that? I mean, if you look at most kids or most families, are you going to want to pay now when you're growing your family, or if your parents could take care of themselves, are you really worried about an inheritance? It's which is better. It's probably easier for the younger people, the younger families, to let the parents take care of themselves as long as they could.
Absolutely. No, that makes perfect sense. So guys, all right, our millions of listeners are out there listening right now. They're wanting to know, like, Taylor, I didn't know about that. I'm looking for a house right now, and I wanted to add a pool, and I can't find a home with a pool, or whatever the reason is. So, How do we get a hold of you? How do we find out more information? What do we do? If I want to get a hold of you now, what do I do?
Call me at 940-395-5361, or you can email me at taylor.hampton@movement.com. I'll take the client and the real estate agent through the entire process with the bids and any kind of contract work they want to have done.
Awesome. And so we'll also put that on the page. You can find our page at Working Title with Zach Sams. So we'll put that contact information out there. Anthony, can we get a hold of you? Is there a way?
Yes, there is a way, and it's my phone number is 201-317-8217. My email address is anthony.calabrese@libertyhomeequity.com.
Everybody knows how to spell Calabrese, I'm sure.
CALA, B as in boy, RESE.
Just how it sounds.
Yes, sir.
Yeah. All right. And for all of you who are, trying to write that while driving, don't worry. We'll have that on the Facebook page as well. And guys, man, I can't thank y'all enough for coming out here and kind of shining some light on, some of these mortgage products that people just don't know about. And, this is a common thing as I meet with a lot of mortgage people. They all have different types of loans, different types of programs that people just don't know about. They're all doing the same loan all the time, most of the time, right? And they just don't know that there's these other avenues out there. So I appreciate y'all bringing that to light. And let's have you come back on and get a little deeper, because we could probably talk for days about how these could help people in different situations.
Sounds great.
Thank you for the opportunity.
Thank you.
Absolutely, guys. Well, this was Working Title with Zach Sams and our great guest host Taylor Hampton with Movement Mortgage, and Anthony Calabrese with Liberty Home Equity Solutions. You have a lot of letters and words in your title today. We're gonna have to shorten that up. All right, guys. Thanks so much. Check out the webpage for the contact, and we'll see y'all next time. Thanks, guys.
Have a great day.
Thank you.
You're listening to RMCN, the digital destination for premium talk radio.